This one rule saves me constantly as a trader, and it is a very simple rule that you can implement that can help you manage your risk and contain your losers. Now, this is a rule that I like to use on almost all aspects of every trade I take, but in particular, I like to use this to keep me safe after I have taken one loss already on the day. Now, let's dive into it because today, this did indeed keep me safe. Now, coming into the day on the NASDAQ, I was primarily looking for a move to the downside. I wasn't really set on that, but that is what I was looking for. And this makes sense. If you look at the action we had coming into the day, we're in an intraday downtrend. We had a weak overnight session. All of this aligns, right? And what I wrote during the stream that I wanted to happen was a rejection or a test of here plus under the opening print. And I would aim for a level that we have down at 941 on the NQ. So this is I was aiming for a big trade, right? 300 or 400 points, depending on the entry trigger, right? So it's a big move that I was looking for. This was in no way, shape, or form a small trade setup or a small trade, right? But what I wanted was a test and rejection of this level and then under the opening print, this green line. That's what I wanted for a short. And that's key to understand all of the details there, right? Because as the market opens up, the NQ does exactly what we needed to for step one of this trade, which is rally into the level, right? Now, after rallying into the level, we create a sell trigger underneath the previous bar's low, or a failure to go higher trigger. And for me, because of the R to R, because we were aiming for this level all the way down here, right? I took a short here. In this trade, though, in this short I entered, we were still above the opening print, which is not ideal for me, right? If I'm shorting, I like for us to be beneath the opening print. Why? Because that gives me confirmation that the daily candle is heading down, right? It's not a firm rule. It's not something that's make or break like for death. Like I said, I'm willing to try trades that are counter opening print like I did today. I took a short above the opening print, right? Shorts, we like below OP. Longs, we like above OP, right? That being said, if the risk reward is there, it is okay to try. And I tried the short and it failed, right? That trade failed. Okay. Right? And that is where this rule starts to come into play for me. I'm allowed one, maybe two. If the risk reward is really good, I can give myself 2 attempts at a counter opening print trade. And that is what I did today. I took another entry because of how good the risk to reward was. I took another entry here on this failure to go higher with my target, again, all the way down at this level. That was my second trade of the day where I was counter opening print, right? Counter opening print, which means the probability is lower. But the R to R was so good that I was willing to try it. And I got stopped out. And I was wrong. Right? Now, in that being wrong, I've been wrong twice already today. Twice. The trade to the downside, this theoretical, hypothetical trade to the downside, still has great risk to reward from these potential entry triggers here. Right there, right there. Those are 2 valid entry triggers that came after I got stopped out twice. And if I wanted a re-entry, those could have provided me a re-entry. But this is where the rule comes into play. I had already taken a loss today on a counter OP trade, trading against the opening print. In fact, I had taken 2. I'm allowed 1. I'm allowed 2 if it's worth it. Today was worth it. I'm never allowed 3. Never. Because that means I'm looking in the eye of lower probability action and saying, yeah, let me get that. Let me get the low probability action. Let me get that. And it's just not a good habit to build. So on stream today, I made a vocal choice to skip these re-entries in this entry, right? And in the process of skipping them, there were some question marks as to why. Because if I was going to try here, wouldn't it be worth it to try here as well? Right? But the truth is, I already lost once on the day trading counter OP. Why would I put myself in a position again where I could lose yet again trading counter to the opening print? I shouldn't. And the truth is, if you are a struggling trader out there, you should not even, if you are struggling and your win rate is really low, if your win rate is really low, right? This is the new rule of thumb for you. The new rule of thumb is that you only trade when the opening print is on your side, right? So you need a daily candle to look like this. This is the daily candle you need for shorts. It needs to be a red bar, right? If you think about it, it makes sense. Jake, why do you only want to short when we're under the opening print? Because if we're under the opening print, that means the daily candle is red, right? If the daily candle is red, I'm just using this meta chart as an example. In theory, that means for that day, that chart has moved down. So yeah, that's the opportunity that we'd be looking for shorts in. When the daily candle is red, this is what we look for. All right? For longs, the only way you'd be willing to long is in the flip case scenario. When we have a daily candle that is green, aka we are above the opening print. Again, if you're an experienced trader with good chart reading skills, it's okay to try entries under the opening print. Once, maybe twice, if it's a great risk to reward trade. No more than that. If you've been struggling with win rate lately, then don't even give yourself the one chance. If you've been struggling with win rate, one of the rules that you now use, I'm telling you, this is a rule you now use, whether you like me or like it or not. If you've been struggling with win rate, a rule that you now use is you only trade with the opening print. We have to be above the opening print for longs, aka you want the daily candle looking like this, and you can find a trend upside move within that candle. If you are struggling with win rates and you want to improve your shorts, you only short on daily candles like this when we are under the opening print. Under the opening print. Again, it does not have to be a firm rule for every trade, but it is a great rule to have in order to prevent yourself from a lot of losers in a row, right? I could have kept stabbing short here. I could keep stabbing short. But instead, I know that I'm not allowed another entry until the chart tells me it's higher probability, and that's under the opening print. Same thing with the GC long. I'm not allowed to long GC. I tried GC long once today. I lost. I am not allowed to try a GC long again until it's back above the opening print, which means I'm not taking one today. All right? So with that being said, my friends, I love you all very much. Use this rule. Please, at the bottom of my heart, I'm begging you 2 things. 1, stop ignoring gold. Start paying attention to it as a trading vehicle. And number 2, use the opening print rule in either capacity, whether it's after one trade or for any trades, to help keep yourself safe, just like I did today. I love you all very, very much. I hope you've enjoyed this video. I'll see you in the next one.